So, ready to take your trading to the next level? We're diving deep into how to become a successful trader today, and let me tell you, this source doesn't hold back. It's packed with insights that could change the way you approach the market.
Even for seasoned traders, I think there are some real gems in here. It's a reminder that this is a constantly evolving field and there's always something new to learn.
Definitely. And the first thing this source stresses is that there are no shortcuts to success in trading. It's not about following the latest hype or getting lucky with a hot stock tip.
Right? It's about building a solid foundation. And that starts with understanding the playing field. We're talking about different financial instruments, not just stocks and crypto, but things like forex, commodities, even futures and options. Each has its own personality, you could say, and its own set of risks.
It's like learning the rules of the game before you even step onto the field. Okay, so let's say you've got a handle on the different players. How do you actually analyze the game itself? I mean, where do you even begin to make sense of all the data and the constant fluctuations?
That's where the two big approaches come in: technical analysis and fundamental analysis. Think of technical analysis like reading a map of the market's past movements. You're looking for patterns, trends, and signals that might hint at where prices are headed next.
Ah, so it's kind of like deciphering a code, but instead of cracking enemy communications, you're trying to crack the code of the market.
Mm.
What about fundamental analysis? How does that fit into the picture?
While technical analysis focuses on price action, fundamentals dig deeper. It's about understanding the real-world forces that drive those price movements. We're talking about things like company earnings, economic data, geopolitical events, anything that can influence the value of an asset.
Okay, so connecting the dots between the headlines and your trading decisions. But here's what really caught my eye. The source claims that you can have all the technical and fundamental knowledge in the world and still fail miserably if you don't master the mental game.
Absolutely. Trading psychology is just as important as any technical skill. Your emotions can be your biggest asset or your worst enemy in the market.
I've definitely been there. One minute you're riding high on a winning streak, and the next you're letting fear and greed drive your decisions.
It's human nature. We all have those emotional triggers. But the key is to recognize them and develop strategies to stay disciplined and rational, even when the market's throwing a tantrum.
All right, so we've talked about the knowledge, the analysis, and the importance of keeping our emotions in check. Now, how do we figure out what kind of trader WE want to be? I mean, there are so many different styles out there, it's almost like choosing a sport.
That's a great analogy. Are you a sprinter, a marathon runner, or maybe a chess player? Your personality, your risk tolerance, and the time you can commit will all factor into which trading style suits you best.
So let's break down those different sports of trading, starting with what sounds like the most intense, scalping.
Scalpers are like those lightning-fast reflexes, you know? They're in and out of trades within seconds or minutes, aiming for small profits that add up over time.
Sounds exciting, but also exhausting.
It definitely requires a certain temperament. You need to be able to handle constant action, make quick decisions, and not be afraid of taking risks.
Okay, so maybe not for the faint of heart. What about day trading? Is that a bit more my speed?
Day trading is like running a 10K. You need focus and stamina, but you know you'll be done by the end of the day. It's about capitalizing on those intraday price fluctuations, opening and closing all your positions before the market closes.
So no checking your portfolio obsessively before bed. That's a plus in my book.
Hmm.
Now, what about swing trading? The name itself's just a bit more of a laid-back approach.
Swing traders are the ones who ride the waves of the market, sometimes for days or even weeks. They're looking for those sweet spots where they can buy low and sell high as prices swing back and forth.
Sounds like you need a good eye for spotting those trends and the patience to let them play out.
Exactly. And then on the other end of the spectrum, we have positional trading. This is like the marathon of the trading world.
Ah, the long game.
Yes, positional traders focus on fundamental value. They're looking for assets that are undervalued and are willing to hold them for months or even years as the market catches up to their true worth.
It's incredible how these trading styles almost reflect different personality types. So we've covered the basic knowledge, the different analysis approaches, the importance of psychology, and now the various trading styles. What's the next step on our roadmap to trading success?
Now that we have the lay of the land, it's time to get practical and explore the tools and platforms that can actually help you put these concepts into action. And trust me, choosing the right tools can make all the difference in your trading journey.
Okay, so we've laid the groundwork, explored different trading styles. Now let's talk tools and platforms. It's like gearing up for an adventure, right? You need the right equipment to navigate the terrain.
Absolutely. It's about finding your base camp, that perfect broker or trading platform. And let me tell you, there are a ton of options out there.
It can be overwhelming. Like, where do you even start?
Well, the source actually highlights a few popular ones like MetaTrader. You've
Yeah.
probably heard of that one. TradingView is another big one. Binance, of course. And then interactive brokers. Each one kind of caters to different needs.
So it's about finding the right fit for your trading style. So let's break them down a bit. MetaTrader, that's kind of the classic choice for forex traders, right?
Yeah, it's known for its charting tools, and you can even do algorithmic trading on it. Pretty
Yes.
powerful stuff.
So if you're a scalper or day trader, maybe looking to automate some of your strategies, MetaTrader could be a good option. What about TradingView? What's the draw there?
Oh, TradingView is great for, well, first of all, the charts. They have an amazing charting library.
Yeah.
But it's also super social. You can connect with other traders, share ideas. It's a great way to, learn from each other.
So a good choice for those who value community and collaboration. Now, Binance. That's a name everyone knows, especially in the crypto world.
Yeah. If you're into crypto trading, Binance is the place to be. Wide range of coins, good fees, they've got it all. Even margin trading and futures, if you're feeling adventurous.
And finally, interactive brokers. That one seems to be a bit more of an all-rounder, right?
Yeah. Stocks, options, futures, forex, they even have bonds. So it's a good fit for those who are, looking to diversify their portfolio across different asset classes.
So many options. It seems like the key is to do your research, understand your own needs, and then choose the platform that aligns with those goals. But before we get too excited about jumping into real money trading, this source really emphasizes practicing on a demo account first. It's like having a flight simulator for trading, wouldn't you say?
Absolutely. I mean, you wouldn't want to just hop into a cockpit without any practice. A demo account lets you experience the real market environment, but without risking your actual money.
Like having that safety net while you're learning the ropes.
Yeah, exactly. You can try different strategies, get familiar with the platform, build your confidence without worrying about blowing up your account.
So crucial for beginners, especially. Now, once we've got our platform sorted and we've honed our skills on that demo account, it's time to start crafting our trading strategy. This is where we go from theory to practice, right?
Exactly. We've got the foundation. Now it's time to build that house.
Mhm.
A well-defined trading strategy is your blueprint for success, your roadmap for navigating the market.
Sounds daunting, though. Where do we even begin?
The source breaks it down nicely.
Yeah.
First, you got to define your entry and exit criteria. Basically, your rules for when you'll buy and sell an asset.
So it's not just about randomly picking stocks or chasing the latest hype, right? There's got to be a system.
Absolutely. Data-driven decisions. Your entry and exit rules, they should be based on your chosen style, your analysis, your overall market outlook.
Yeah.
You've got to be consistent.
Okay, makes sense. But even with a solid entry and exit strategy, things can go wrong, right? The market is unpredictable. And losses are part of the game, wouldn't you say?
Oh yeah, losses are inevitable. And that's why risk management is so crucial. It's about protecting your capital from, well, blowing up your account.
It's like having insurance for your trades. So what are some of the essential tools every trader should have in their risk management toolkit?
The most fundamental is the stop-loss order. It's like setting a safety net. You're telling the market, okay, if the price drops below this point, automatically sell.
So even if you're not constantly glued to your screen, you've got a mechanism in place to limit potential losses. Now, what about the flip side? Locking in profits when a trade's going your way.
Take profit orders. They automatically sell your position when your price target is hit. It helps avoid getting greedy.
Love it. Like having a disciplined robot working alongside you, executing the plan, even when your emotions are trying to take over. Now, we've talked a bit about diversification in terms of choosing different asset classes, but is there more to it than that?
Oh, definitely. Diversification isn't just about what you invest in. It's also about how you invest. It's good to have a toolbox of different strategies.
Yeah. So don't limit yourself to just one trading style. Explore different techniques, different indicators.
Exactly. Think of it like a Swiss Army knife. You need different tools for different situations, right?
Love that analogy. So diversification is about spreading your risk, expanding your knowledge, and staying open to new ideas. But earlier, we talked about the psychology of trading and how important it is to master your emotions. This source really emphasizes that it's not just about having a plan, it's about being able to execute that plan under pressure.
Oh, absolutely. Trading is such a psychological game. It's a constant battle against fear and greed.
So how do we train our minds for this battlefield? It's not like we can just tell ourselves to stop feeling fear or greed.
Right. But one effective tool is journaling. And not just like, oh, I made this much money today. It's about documenting your entire thought process, your emotional state before, during, and after a trade.
So like a diary for your trading journey, but how does that actually help us improve?
Well, by reviewing your journal, you start to notice patterns.
Mm.
Maybe you tend to make impulsive trades after a string of losses. Or you discover that your most profitable trades follow a certain setup.
So you're turning your experiences into data points that you can learn from.
Exactly. And journaling also helps you identify those emotional triggers. Those moments when fear or greed might be clouding your judgment.
It's like having a personal therapist for your trading psychology. But beyond journaling, what other resources are out there? I mean, the internet is a vast jungle of information.
Oh yeah, for sure. But you've got to be discerning. Look for reputable sources, websites, blogs, forums written by experienced traders, analysts with a proven track record.
Don't just blindly follow anyone who claims to be a guru.
Right. And don't be afraid to challenge what you read. Think critically. Develop your own opinions. Find your own unique style.
So it's not about copying someone else's strategy. It's about developing your own independent judgment. Now, online resources are great, but what about the human element? Is there value in connecting with other traders?
Definitely. There's something powerful about real-world connections. Attend a conference. Join a local trading group. It's amazing what you can learn from sharing experiences with others.
It's like having a tribe of like-minded people who understand the unique challenges and rewards of trading. Okay, so we've covered a lot of ground here, but here's the million-dollar question. How do you know when you're actually ready to start trading with real money?
That's the big question, isn't it? And there's no easy answer, unfortunately. It's a personal decision. But here are a few things to consider. First, do you really understand the markets and the risks?
I mean, we've talked about the importance of education, so hopefully by now our listeners have a good grasp of the basics.
Right. Second, do you have a well-defined trading strategy? And have you back-tested it, refined it on a demo account?
Yeah, having a plan is crucial.
Okay, good. And third, and this is a big one, are you comfortable with the possibility of losing money?
Ooh, that's a tough one. But it's reality, right? Trading involves risk. You can't win every trade.
Exactly. Even the most successful traders experience losses. The key is to manage those losses effectively.
So it's not about avoiding losses altogether. It's about having a plan for how to handle them.
Right. Now, if you can honestly answer yes to those three questions, then you might be ready to start thinking about trading with real money. But even then, start small.
Dip your toes in the water before jumping headfirst into the deep end.
Absolutely. The source recommends starting with a small amount of capital, something you're comfortable potentially losing.
It's like learning to drive. You don't start by racing in the Indy 500.
Right. Much better to start small, get a feel for the car, then gradually build up your skills. So yeah, start small, manage your risk, and never stop learning.
That seems to be the recurring theme here. Now, even with all the preparation in the world, there's one element that's impossible to control entirely: the market itself.
Oh yeah, the market's a wild beast. It can change on a dime.
So it's not just about having a plan. You need to be adaptable, ready to pivot when necessary.
Absolutely. The source compares the market to a constantly shifting landscape. What worked yesterday might not work tomorrow. You got to be a lifelong learner to stay ahead of the curve.
So a growth mindset is crucial. Now, we've talked about diversification in terms of choosing different assets, but you also mentioned diversifying your strategies. Can you elaborate on that?
Yeah, it's not just about having a basket of different stocks. It's about having a toolbox of different strategies.
So don't limit yourself to just one approach.
Exactly. Explore different techniques, different indicators, maybe even combine fundamental analysis with technical analysis.
Yeah.
Have a Swiss Army knife of trading tools.
I love that. The more tools you have, the more adaptable you'll be. So diversification is about spreading risk, expanding knowledge, and staying open to new ideas.
Precisely. The market is constantly evolving. New technologies pop up. Global events shift the landscape. You got to be willing to adapt.
So successful trading is not just about technical skills. It's about mental agility.
Absolutely. And emotional resilience. Trading is a journey. It's about learning, adapting, refining your approach.
It's about becoming the best trader you can be.
Exactly. And, it's not just about the money. It's about the personal growth, the intellectual challenge. It's about pushing yourself to master a craft.
Beautifully said. Okay, so to our listener who's ready to take the plunge, remember, trading is not a get-rich-quick scheme. It's a craft. It takes time, dedication, And you will make mistakes.
But you learn from those mistakes. That's the key. So stay informed, stay connected with other traders, and most importantly, stay true to your own style and your own risk tolerance.
Perfect advice. We've covered so much ground today. I hope you found this conversation valuable. But before we wrap up, I just want to leave you with one final thought.
Oh, I'm intrigued. A parting gem of wisdom.
Remember why you started this journey. What are your goals? What are you hoping to achieve through trading?
That's such an important question. It's easy to get caught up in the day-to-day and lose sight of the bigger picture.
Exactly. Whether you're trading to, supplement your income, save for retirement, or just because you love the intellectual challenge, stay connected to your why.
Because when the market throws those inevitable curveballs your way, it's your why that will keep you going.
It's your fuel, your anchor, your compass.
Beautifully said. So to our listener, as you embark on this adventure, let your why be your guiding star.
We've reached the end of our deep dive into trading, but the journey doesn't end here.
Keep learning, keep adapting, keep pushing yourself to become a better trader, and happy trading, everyone.
We've talked about strategy, the right tools. We even touched on the mindset you need to succeed in trading. But there's this one piece we haven't really dug into yet, the mental game. In this source, it really hammers home the point that even with a perfect plan, your emotions can totally wreck everything.
It's so true. Trading psychology, it's the missing link for a lot of traders.
Yeah. So how do we actually train our minds to handle the pressure, the ups and downs, all those wins and losses that just come with the territory?
Well, it's a process. It's not like learning, chart patterns or anything. It's a different kind of training. This source, it talks about visualization, which is pretty interesting.
Visualization. So picturing yourself making successful trades.
Exactly. You're basically doing a mental rehearsal.
Yeah.
Imagine yourself going through the whole trading process.
Okay, so before I even enter a trade, I'm playing out different scenarios in my head.
Yeah. See yourself analyzing those charts, picking your entry point, your exit point, setting your stop loss, your take profit. But here's the key. Visualize yourself staying calm, disciplined, even if the trade starts going against you.
Wow, it's like programming your brain to stick to the plan no matter what's happening emotionally.
That's the idea. By repeatedly visualizing those winning trades, you're reinforcing that discipline. And don't just focus on the good stuff. Visualize yourself handling losses gracefully too. Learning from them, coming back even stronger.
That's a good point, preparing for those setbacks mentally. Okay, but visualization, that's just one technique, right?
Yeah.
What else can help us level up our trading psychology?
Mindfulness. Well, it's a big one. Basically being aware of your thoughts, your emotions, without judging them. When you're in a trade and you feel that fear starting to creep in or that greed tempting you to hold on for just a little longer.
Yeah, I know those feelings.
Mindfulness, it helps you create that space between the emotion and your actions. So it's like you could hit the pause button before reacting impulsively.
I can observe those emotions, but not let them control my decisions.
Exactly. And then something people often overlook is self-care outside of trading.
Oh, yeah, you mean getting enough sleep, exercise, all that good stuff.
Yeah, it's super important. Trading, it can be mentally and emotionally draining. You need to recharge.
Right. If you're burnt out or stressed, you're not going to make good decisions.
Exactly. And remember, trading, it's not a sprint. It's a marathon. It's consistency, discipline, having a long-term perspective.
We've covered so much today. It's been amazing, really. But as we wrap up, I just want to say to anyone out there who's listening and ready to start this journey, remember, trading, it's a process. It's learning, adapting, constantly refining your approach.
And there's always something new to learn.
So stay curious, stay disciplined, never stop learning.
And never forget, trading, it's not just about the money. It's about personal growth, challenging yourself.
It's about becoming the best trader you can be. And with that, I think we've reached the end of our deep dive.
It's been a great conversation. Thanks for having me.
Thanks for joining us. We'll see you next time. Happy trading, everyone.